This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil settled modestly lower on Friday but secured a weekly gain on a stronger demand outlook and signs of economic recovery in China and the United States that offset concerns about rising COVID-19 infections in other major economies. Brent crude settled down 17 cents, or 0.3%, at $66.77 a barrel. The global benchmark finished up 6% on the week after rising in the past 4 sessions. U.S. West Texas Intermediate (WTI) crude settled down 33 cents, or 0.5%, at $63.13. China's first quarter gross domestic product jumped 18.3% year-on-year, official data showed.
U.S. energy firms added oil and natural gas rigs for a fifth week in a row for the first time since February as higher oil prices in recent months prompted some drillers to return to the well pad. The oil and gas rig count, an early indicator of future output, rose 7 to 439 in the week to April 16, its highest since April 2020, energy services firm Baker Hughes Co. said in its closely followed report on Friday. That puts the rig count up 80% since falling to a record low of 244 in August 2020, according to Baker Hughes data going back to 1940. The total count, however, is still 90 rigs, or 17%, below this time last year.
Moving on to the top news in the energy sector.
The amount of oil transported by rail in Russia fell by a third in 2020 compared to 2019 due to rapid development of the state's pipeline system and an output drop under the OPEC Plus Pact, traders said and Reuters calculations showed. Crude transportation via the railways in Russia has been in decline for the last 5 years as pipeline monopoly Transneft commissioned major new links like the East Siberian Oil Pipeline, ESPO, and Baltic Pipeline System. Oil pipelines allow companies to transport crude oil quicker and at a lower cost than by rail. Due to the high costs, most Russian oil companies stopped using rail transport after a sharp fall in crude prices last year.
Nigeria has sweetened the terms of a sweeping oil reform bill in a bid to attract much-needed investment to its oil industry. 4 people closely involved with the legislation said in a letter from oil companies, seen by Reuters, showed. The proposed changes signal a shift by Africa's largest oil producer and show the impact of an increasingly competitive environment in the energy business after 2020's global oil price collapse and an expected shift to renewables. Nigeria in 2019 had fast-tracked a law to boost its take of offshore oil revenue, a move industry experts said at the time could put billions of dollars of offshore oil investments at risk. The reform bill has been in the works for 2 decades, but the contentious nature of changes to Nigeria's oil sector, which provides 90% of foreign exchange and nearly half the national budget, have scuppered previous versions.
Next, we have the top news in metal markets.
China has given domestic and international banks permission to import large amounts of gold into the country, 5 sources familiar with the matter said, potentially helping to support global gold prices after months of declines. China is the world's biggest gold consumer, gobbling up hundreds of tons of the precious metal worth tens of billions of dollars each year, but its imports plunged as the coronavirus spread and local demand dried up. With China's economy rebounding strongly since the second half of last year, demand for gold jewelry, bars and coins has recovered, driving domestic prices above global benchmark rates and making it profitable to import bullion.
Australian-listed lithium miners are preparing for better times ahead. Filings showed this week, as they outlined expansion plans in the wake of soaring prices for the raw material used in electric vehicle batteries. Mineral Resources Limited, Orocobre Limited and Galaxy Resources filed reports that pointed to a rebound in lithium demand, through better sales and building out new projects, flagging upbeat earnings as the reporting season begins next week. The reports suggest that stimulus measures to combat the economic effects of COVID-19 are feeding through to the real economy and to electric vehicle sales. We will now look at the top news in the agricultural sector. Germany's 2021 wheat crop of all types is expected to increase by 2.2% on the year to 22.63 million tons, the country's Association of Farm Cooperatives said in its second harvest estimate on Friday. The DRV Association forecast Germany's 2021 winter rapeseed crop will rise 1.6% from last summer's crop to 3.57 million tons. This was up from its first harvest forecast in March, when the association had forecast a wheat crop of 22.34 million tons and a winter rapeseed crop of 3.48 million tons. Germany's weather has been fundamentally positive for grains and rapeseed, so the forecasts are being increased, the association said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.